Alright traders, we're looking at S&P 500 M&A futures. The structure is in a very strong uptrend. As you can see, the trend line nicely aligns with the EMA. I'm going to be focusing only on pure price action. We had a decent visual double trap, but the market is going to open in a few minutes. It also was an inside bar, so I skipped it because it's an inside bar, but the uptrend is working higher and we expect new high. The break is very tiny. I can also consider making it a little bit wider like this. We'll see what market does after open. So our main uptrend has a break, which means according to trendline rule, I expect new high to be tested. We're below EMA, so I don't want to go long just yet. I'm waiting for the push above EMA so I can resume buying. Okay, so we had a high-low confirmation setup of the two-leg pullback, but it simply closed too big at the very top of the move. It's a shame, had it been half its size, this is a great high-low to consider. Now we have a mini second inch long. The problem is, once again, an inside bar. You know, I just don't like inside bars, so decent second inch long. We need to get new high for the main uptrend, the secondary one as well. Another inside bar today that worked. It took a while for market to correct, which is normal when we trade up so strongly. But you can see if you follow the main bias, you still are expecting prices to go higher. So a couple decent setups. Right traders, I'm resuming the video because I just entered a second inch long. It's a little bit of aggressive setup because I drew the short-term downtrend in play, but because the second inch long forms so big, completely retracing the entire push down all of these previous candles, I decided to risk this more of aggressive setup. It is a new high first inch long, second inch long, bonds on my exit order, but we need to take through. I used limit order to decrease the risk. Scalping 7 contracts for 2 points. Stop loss goes 1 tick below the signal bar. Come on. You can see how well the spike and the channel fits. Market geometry aligns with the EMA. Okay, and we got filled, so I'm gonna move the stop loss to break even. Had the second inch long been smaller, I would have waited because I was afraid of the short-term downtrend. But once the second inch long forms so big, completely engulfing all these candles, this is where I decided to bet on the bullish momentum and bet on the spike and the channel pattern, which fits really well. So it was quite a decent bar. And now we're just gonna manage the runner, hopefully. Alright cheers, I'm resuming the video. I just entered a failed second entry short. A little bit aggressive because we had overshoot. And the downtrend can be a little bit wider. But it's such a great signal bar, we need new high. So I decided to take a risk. The same contract size for scalp, runner, 1 contract, and stop loss has to go 1 tick below the signal bar. Okay, so overshoot generated a stronger pullback. Now we have visual 2 legs down. We had a losing trade here, but it's okay. It was aggressive setup. So remember, if you're taking an aggressive trade, you need to take more of these aggressive trades. You cannot be waiting the entire day just to take one aggressive trade because we had overshoot. So this was quite a decent push down. But because we had overshoot of this downtrend, it can also generate a stronger pullback in the opposite direction. And you expect new high. So this was a great signal bar. It failed, no problem. And now the downtrend played out, so we still expect new high, but we need to push above EMA, otherwise the overshoot can reverse. So let's see now if we can push back above the EMA and get the new high. Right traders, I'm gonna try to take a very deep limit order on this high low. The signal bar is buried, so I cannot of course go long above this bar, but I'm gonna use double bar entry, waiting for the second bar to get a trigger. And right now if prices pull back, I'm gonna enter the high low, decreasing my risk substantially because I cannot enter at the very top. So I'm going to handle this as a double bar entry, but we need to go back, fill me here, because uptrend is new high. We have broad 2 legs down, push above EMA, everything in price action aligns that we need to get new high. I just have to enter it as a double bar entry. Don't really want to enter at the very top of the move. So I'm using limit order. Hopefully my limit order is not that deep. Come on. Alright, it looks like the market will go higher without pulling back. If I had it one tick higher, we would have gotten filled here. So limit order around this area would still be filled. We expect new high, 2 legs down. We have a 2-legged pullback down, the downtrend played out. You have a fell breakout out of our consolidation. We actually have a new low here for a century short. So if we get a felt second entry short above EMA back into the trend range, I would consider, simply because the main bias today, as you can see if I'm going to zoom back, is still quite bullish. So I'm treating this as we traded up into this trend range, downtrend played out, 2 legs down, market moves in twos. So I'm looking for a felt second entry short above the EMA. So this is the overall structure for today. We traded up strongly into this consolidation. You can't really go long as prices are below EMA. You need to see the decisive push that the buyers are back in the market and they're taking control. We have a lowest low, first entry short, pull back, second entry short failure, great strong signal bar. Then we had a broad 2-legged pullback. This second entry long looks great, but it's not fully at the key level, and you can see I even drew the key level higher. If you draw it like this, you have no confirmations. So unfortunately, this second entry long is not fully at the key level. You'd have to cut so many bars, and even then, the body is still not touching it. We want to see body much closer to the key level. So we can see market moves in pairs of twos. Almost great setup, but we need to see one more push lower, close to the key level. Push above EMA once again is resumption of the bullish bias. We had a high-low confirmation setup, which means you cannot go long at the top because it's too big. It's confirming the second entry long. But you need to drop the limit order, let's say halfway in, and then you have to wait for retracement, and then you can consider buying, because if you're going to go long at the top, it still worked, yes, but your risk is too big and you're buying at the top of the move. It may not work every single time. Then you had a mini second entry long, breaking new high. I don't see any good setup, just congestion here, no nothing. Breaking new low again. You go for a century short, you want to see second entry short failure. You have it here, but it's so far from the EMA. We can't really take it. No, nothing here, nothing here. First entry long. You have a decent second entry long. Double overshoot. We have felt second entry short. Decent setup. Market needed a 2-legged pullback. Then we had a great high-low confirmation setup. This one is even safer than this one, because now you even have the 2 legs down. Downtrend played with the breaking new stream. So this one is less aggressive than this one. So you have to enter this. Breaking new high. You have a second entry long and high-low, but it's below EMA, uptrend played out. After breaking new high, you can expect correction reversal, brand new market cycle. So you reverse down, you can see nice market geometry. But you have only first entry short here, first entry short again, breaking new low. Then if I'm going to zoom back, you can see 2 legs down, market moves in pairs of twos, fell breakout, out of this consolidation. Then you can finish the day with a fell second entry short, breaking new high, and market is about to close. So decent price action, quite predictable. And this is the overall structure for today. So I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck in your trading.